Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader on XAUUSD. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 4-hour chart of DXY US dollar in front of us. And yesterday we discussed about the possibility of an upside because before news, we had the falling wedge here. But right before FOMC, we saw a drop on the chart, but still our expectation was on point because yes, after FOMC, we got to see good amount of upside on the chart of DXY and good amount of selling on the chart of gold. So let's discuss one by one. So first of all, you can see here, it was no surprise the US Federal Open Market Committee concluded its two-day June meeting by leaving the Fed fund rate unchanged. Mr. Powell gave plenty of notice the Fed would pause rate hikes this month, which it did, ending a run of 10 consecutive increases. However, the comments from the others that the US should expect additional hikes still rings true as part of the announcement talk about possible 2 more increases in 2023 with a rate target between 5.5% and 5.7%. The market knew it very well that there will not be any rate hikes. There was a pause was about to come. Yes, we got the pause we were waiting for, but they also talked about 2 additional interest rate hike in 2023, as a result of which we got to see a good recovery on DXY right after FOMC. Right now you can see that DXY is standing at 103.26. This is the current market price and things have changed right now for DXY, so we can expect further upside on DXY till US session because you can see that we have a long list of events for dollar as well. Yes, we have some news for dollar as well, so till US session we can expect DXY to remain upside. We can expect DXY to remain bullish or show some buying power. And if you look at the chart, then we can see the market is not settled yet, as a result of which it is quite complicated right now to trade. So if you're a beginner, if you're new to the market with a very low capital, then try to avoid the market, observe the market, because market needs to settle first. If possible, take risks for the day because you don't need to trade every day. Okay, we are traders, we are not gamblers. We only trade when we see the opportunity is right. So if you're unable to understand this market, then it's better to avoid. And if you're planning to trade, determined to trade, then let me tell you that during the day, if market continues the upside, DXY continues the upside, then we can see that it is approaching the resistance of the trend line, the dynamic resistance. If market reverses from the resistance, you can expect 1 or 2 red candles before the news. And if it tries to continue the upside, then obviously 104 will be there standing as the big resistance here. And I don't think so market will be able to cross 104 level before US session. You can see here we have previous price rejection around this area. We also have multiple moving averages. So 103.60 to 103.80 is the resistance for DXY before news, and 104 is the ultimate level before news. And if market continues the present structure here, you can see the structure of the market is like this. So if market continues the present structure, then there's a high chance that next time market will break the support of 102.70 and market will head towards the next support of 102.27 or 102.25. okay, because it will be like this. Okay, so we have 103.60, 103.80 as the resistance, place of sellers before the news, and we have 102.27 as the place of buyers before the news, and we also have a trend line in between. Again, I'll say market is not settled yet. Be careful of the market. Now let's look at the chart of gold. Then gold is struggling around the last support of 1932, 1933. We have been discussing for the last couple of days. 1932 to 1933. This is the last support of gold in front of us. We have discussed in our previous videos also that gold is trading in a range. So this is the last support you can see. Before this, we had a support around 1937, 1938, 1939, and because of high selling pressure, that support is gone. And right now, gold is trying its best to maintain the support above this level. We always talk about charts and how we can make money from trading on various pairs, but today we will discuss some other cool methods of earning serious money with Vantage, who has sponsored the today's video. Vantage have an excellent and a very lucrative referral model. First of all, they have a very well-paying introducing broker program where the broker pays you a percentage of every trade your referred client places. The more clients you sign up, the more money you can make, the greater your income is. This is a meter here, and you can see how much money you can generate. The meter will give you the basic idea how much revenue you can generate. So you can make around $800 if you have 10 clients. If you sign up around 35 clients, you can see that you can make around $3,000. And if you want to take the introducing broker program to the next level and you work very hard, and if you have 100 clients, then you can see that you can make $8,000 per month. This meter will give you the rough idea how much money you can expect. Apart from introducing broker, they also have a very lucrative CPA model, cost per action, where you can make up to $800 per referral. The $800 referral is for tier 1 countries only. For countries like India, you can make up to $100 per referral. You can see they have a list where they have mentioned how much you can make according to the tier countries, tier 1, tier 2 countries, and also you can see what are the requirements you need to fulfill. If you're confused, then stop thinking and simply choose their hybrid program. In hybrid model, you'll receive a CPA commission and also a rebate revenue from the trades of your referred clients. With Vantage hybrid program, you will have the opportunity to earn up to $480 for each sign up referral to the Vantage, and also industry leading rebate model from the trades of your referred clients. The hybrid model is perfect for those who want to enjoy the both CPA as well as the introducing broker programs. If you have a dream of starting your own trading platform, then you can check out their white label partnership. Launching a Forex and a CFD brokerage can be a complex and an expensive endeavor. At Vantage, they simplify this process and boost your chances of success through their white label partnership. You gain access to cutting-edge technology, comprehensive support, customizable trading platforms branded with your own logo, and a wide range of global markets including Forex, indices, commodities, share CFDs, and many more. If you're looking for some serious source of income apart from trading, then definitely you can consider partnering up with Vantage. Check out the link in the description and change your life. During the day, if gold continues the minor recovery like this, then the first level of resistance will be around 1938 to 1939, which was the previous support, and right now the previous support will be acting as the new resistance. Previous support will be acting as the new resistance, or you can also consider this as R1. If market struggles around this area, if you see price rejection from above around this area, you can consider a sell. And in case market breaks this level here, if you see that suddenly gold is forming a big green candle, obviously we need to use our common sense and avoid any sell around this area, and then you can look for some selling around the second resistance of 1945 to 1946. This is the second resistance, and the third resistance is around 1949 to 1950. So these are the three resistances where you can expect sellers to be present, where you can expect the market to struggle, and we can take a sell position. 1949, 1950 is the strongest. Then we have 1945, 46, and lastly we have 1938, 1939. 1938, 1939 is the weakest resistance in front of us. Let me show you why we are talking about these levels. Okay, we are using Fibonacci here, and when we use Fibonacci, we saw that it has also aligned with price action, because you can see previous market took support around this area, and the same level has also become Fibo 23.6% retracement level around 1938, 1939, 40. We can see price taking support, same level, Fibo 23.6% retracement level. Similarly, around the Fibonacci 50% retracement level, we can see them again. Market took some support around this area previously, so 1945-46 is also looks to be a good resistance for day trading purpose. And then we have 1949-1950, because apart from Fibonacci 61.8% retracement here, we also have the 50 moving average around this area. So these two levels look really good to me, and Fibo 23.6 being a weak level may work if the volatility of the market remains like this. If you're wondering why I'm not talking about this level here, if you want, then you can consider 1943 as well. It's optional. And as the structure of the market looks weak right now, we can see a heavy sell on the market, and market is just struggling around this area. So yes, there is also a good possibility that after few hours or few minutes, market may break 1932 as well. So if market breaks 1932, you can also take a sell position. But keep in mind that before the US session, we may not get to see a series of red candles. It cannot be a free fall in the market. So you can expect a fall of around 40 to 50 pips. You can expect the market to hit around 26, 27 level. If market breaks 1932, just observe the size of the candle. If you see size of the candle is like this, then obviously selling pressure is present and you can go for a sell. On the other hand, if you see the market is breaking the support, but the selling pressure is not very high. If you see the size of the candles are like small candles, market is forming dojis and spinning tops, then try to avoid a sell position. What you can do is, okay, you can wait for the market for a pullback, because no market goes down in a straight line, goes up in a straight line. When market will be coming up again, listen to me carefully, when market is coming up again, hit the 1932, 1933 level again, the same support will be the new resistance. Okay, so when the same support will be the new resistance, you can consider a sell position there also, if you do not want to take a sell at breakdown. So these are the two what to say trading methods we can look for. If market breaks 32 level with good selling, we can look for a quick sell opportunity. But if the selling pressure is not very convincing enough, try to go for a sell at pullback only. So these are the trading opportunities that I see on the chart of gold right now. Be careful because of the volatility market has not settled yet, and we also have a coming news by the US session. Follow proper risk management. As always, I do not gamble with your hard-earned money. This is my analysis. I can be wrong as well, so be careful. Do your own research as well. Bye bye. Take care.